Ready, set, go.
Good afternoon. It's Robert and Julia Miller with the J. Patel Group and RETHINK Real Estate with another exciting real estate update.
Exciting, and it will be exciting because we're discussing the Cromford Report.
That's right. There was some positive moments in the report yesterday.
There was, definitely. It's always good to hear from Tina Tambier.
So episode 114.
114, yep. Don't forget to like and subscribe to stay up to date on all the real estate news here in the Phoenix market.
That's right. Get it all right here.
Right.
So today, we'll try not to make it too long a report, but we do have a lot of information to cover. We will start with just a little bit of humor, a little bit of history, and then we'll move right into Melissa's Monday Mortgage Minute, which is going to cover the interesting developments in banking that have occurred
It was an
last
exciting
week.
day. Friday, right?
I think it was Friday last week. So we will cover that and get her thoughts on the repercussions of that, and interestingly, some information that came out that on the same day that's mostly overlooked because of the headlines of the banks failing.
Overshadowed? Okay.
Overshadowed, yeah.
Okay.
So then we will cover the Cromford Report. We will just do a recap. Keep that as brief as we can, but hit all the details. I'll probably cover rates when I cover Melissa's Monday Mortgage Minute. Yeah,
that makes sense.
and then we'll wrap it up with inventory.
Your favorite topic.
Yep, and I am making a change that
Yes,
I'll let you know about, but you have to
interesting
stay
change.
till the end to find out.
That's
So
right.
Hang in there.
Has to do with that inventory and those numbers that we report and how it's reported.
Right.
So, yeah.
All right, lay your joke on us.
Well, I just spent 15 minutes looking for my phone in the car, using my phone as a flashlight.
I am guilty of sometimes.
Sometimes you're like, "Where's my phone?
Where's
I
my
can't
phone?
Find my phone."
Oh, yeah.
Never
that's
mind.
right.
It's right there.
Yeah, I'm with you, girlfriend. All right. Controlling my tongue is no problem. It's my face I struggle with.
That's usually me. I'm pretty expressive usually. Like, when people are talking to me, I'm usually like,
Are you really saying that
"Are
right
you
now?
listening to yourself?"
I'm trying to
No.
keep a straight face. But anyway.
Oh boy.
All right, let's move on to a little bit of history that
You're
happened
keeping it down to like
this week.
2 or 3.
Well, there's a few
historical
more
facts, right?
because I'll be fast because it was an interesting week in history. You know how much I love history.
Yes, true.
2009, the Sears Tower in Chicago is renamed as the Willis Tower. So
And I didn't know this. I mean, we've always called it Sears Tower.
well, it was actually sold. Sears sold it to the Willis Group. They are an insurance broker, and Sears sold it in 1988, but they waited until 2009 to change the name.
I guess we moved here to Arizona in 2005, so the news could have gone right by me. I would have known because we're not in Illinois anymore. So
1993, Janet Reno is sworn in March 13th as the first female U.S. Attorney General.
definitely remember that.
1972, the epic crime family drama The Godfather debuts March 15th.
It was good. It was scary, but good.
Yeah. 1931, Nevada legalizes gambling March 18th, paving the future for the state's economy. And I had to look it up, and it's interesting that they did this during Prohibition. Now, it was 2 years from the end of Prohibition, but
That's why there's bootlegging going on.
yeah, there was probably some bootlegging going on in Nevada. Yeah.
Yeah.
New economy opportunity there.
Yeah.
1892, on March 15th, Jesse Reno patents the inclined elevator, the first escalator.
Inclined elevator. That's
I
cool.
didn't know what to call it, but
1892. Wow.
yeah. 1794, March 14th, Eli Whitney receives a patent for the cotton gin. Boy, did that save some labor. And finally, 44 BC, Roman Emperor Julius Caesar is assassinated on March 15th.
Yes, he was.
Yeah. I remember seeing that, watching that movie. Couldn't watch it in class, had to go see it at a theater somewhere or something. Anyway. All right, moving on. Let's talk a little bit of news.
It's the MMM.
Put that away too quickly.
Oh, okay.
Economic news. I'll be brief on this.
I thought you were doing the Monday mortgage minute
Well, I'm
first.
going to do a little news, and then we'll jump into Monday
okay.
mortgage. Job growth rolls on. Non-farm payroll rose 311 in February. So last year's
Yay.
or last month's 522,000. This was a little more in line. I still am not sure that this new way they're calculating
You're not
everything
trusting
is
the calculations?
correct, but basically it came in line. So wage growth was up 4.6 year over year, sending mixed signals for inflation. Investors are now expecting a smaller hike. Last week's market prices indicated expectations of a 0.25 point increase in interest rates when the Fed's policy group meets March 22nd. Now, the reason cooling wage growth and the collapse of a large California bank, there's actually two of them.
Yes.
There's one in New York as well, Signature. California bank were apparently enough evidence of softened inflation to quell half-point predictions from just a week earlier. So we'll see how that
Yeah, I mean, I thought we were
pans
talking
out.
a half
Yeah,
point
now with
versus
the
quarter
hits
point.
that the economy has taken and now this banking thing, they're saying, okay, it looks like the Fed is going to back off and maybe only do a quarter. So we shall find out.
Okay.
Housing news, real estate asset values fall. The value of U.S. homeowners' overall real estate assets decreased in the fourth quarter of 2022, the first time it has fallen since Q1 of 2012. So basically, you know, you're living in an asset, it grows in value, and for the first time since 2012, it decreased.
Yes. Yes, it did.
Values dropped.
Appreciation, right? I mean, we're talking about appreciation there.
Yeah, essentially.
Yeah.
Yeah. It wasn't huge. It dropped to 43.5 trillion from 43.57 trillion in the third quarter. So it's not huge, but it's still the first time we've seen it go down. So luxury home prices, high interest rates are hitting the luxury home market hard, with sales down 45% in a recent 3-month period.
Okay.
All right, moving on. Regulatory news. Fed chief anticipates higher rates. With inflation steadying after a brief slowdown in late 2022, Fed Chair Jerome Powell warned Congress last week that the peak federal funds rate, now at 4.57, may rise above 5.2%, the Fed predicted in December. So he's kind of hedging his bets here, where either direction he goes, he's going to be right. It's not a bad strategy.
It's not a bad strategy, yeah.
Here's something we haven't talked about in a long time. This has been brought up a few times, usually when housing is in a rocky period. FHA's 40-year option.
That's true. It has been a while since we talked about that.
Effective May 8th, homeowners at risk of default on Federal Housing Authority loans may be eligible for a 40-year fixed-rate mortgage modification option. Wow, we haven't talked modifications forever.
We haven't. Yeah.
And it just seems so bizarre out in Arizona. You know, I know other parts of the country are affected differently by what we're going through with housing, but we're going to cover in the Cromford Report where we're at on foreclosures, and it is laughable. So, tech bank collapse. Last week, federal regulations shut down Silicon Valley Bank, a key
SVB.
Thank you. A key player in tech and venture capital for decades. On Wednesday, SVB announced plans to raise $2.2 billion to shore up its balance sheet, Within hours, news and rumors fueled a panic run on the bank by depositors. Insolvency followed 2 days
It was
later.
a run on the bank.
And that's since been corrected. All depositors' money is safe,
Yeah.
and they've
Yeah, the
stepped in and kind of
FDIC
corrected that.
FDIC
And,
has backed the investments for that bank and
Yep.
bailed them out, so to speak. I
Right.
know
We
if
don't
that's
want
actually
this
what it's called,
escalating and steamrolling, so they stepped in pretty swiftly.
but yeah,
And Melissa's going to have
Yeah,
some
we're more on that.
input on exactly what that means. So
Here
you
we
said
go.
we talked about the big news, the banks, but we're going to talk about what was largely overlooked on Friday afternoon that pushed rates down a bit and will be just as newsworthy in the long run. So a little history. We're going to go back in time a little bit to unpackage this. Look back at some of the talking points. Federal Chair Powell outright saying, testifying before Congress even, that American families and businesses were going to feel pain in the fight to bring down inflation. That was just about 6 months ago. That was August 2022.
Wow.
In other words, bad news would be good news for rates.
Right.
Okay? So,
That's what we keep looking for every month is bad news.
so the big news was the bank closures and the concerns, but what got overshadowed by that news on Friday was the jobs report.
Yeah.
Unemployment went up. Initial jobless claims, people filing for unemployment, increased. Average hourly earnings decreased. And average hours worked per week fell as well. I'm
So people are-
constantly trying to get that within my own little business here, less hours work, but I can never get the boss to approve it.
No.
Yeah.
People are working more but being paid less.
Well, according to this, they're even working less.
They're even working less.
Less
Working
hours.
less and
Yeah.
being paid less.
I should be able to get in on that action. In short, people are working less hours, earning less during those working hours, and more folks are finding their way to filing for unemployment. This is devastating news for those experiencing this, and whether we like it or not, it's exactly what the Fed's playbook is drawn up to fight inflation.
Exactly.
So here's just a simplified version of the Fed's playbook. Hike rates.
Check.
Raises the cost of doing business in numerous ways, as we'll see with the SVB closure.
Check.
Forces employers to implement reduced hours, reduced pay, and or layoffs, which eventually
Check.
result in increased unemployment and or less cash for consumers to spend, which in turn
Check.
means consumers have less ability to purchase goods and services. Thus, rebalances the supply and demand and brings down the cost of goods and services.
That's the one we're waiting on. We're waiting on that rebalancing and bringing down the costs.
Right. And we're going to cover...
Housing's already, the cost of housing's already been brought down. Affordability is getting better. So we need the cost of some of the other things to improve.
Right. So, with this first pain domino, she's calling it, falling, it will be very interesting to see if they continue hiking rates in their next meeting on March 22nd.
Yeah, March
so,
22nd.
here's her prediction. At the
next
moment, I believe they will still hike rates, but it'll be 0.25% instead of previously forecast 0.5.
That's a little ray of sunshine. We'll take it.
Right.
We will take that thought process, Melissa.
So Melissa's input on this Silicon Valley Bank and Signature Bank closures, basically there's a plethora of reports on this matter, and if you want to talk to her more about it, she welcomes a phone call. She loves talking about this kind of stuff, so give her a call. We'll give you her number. But in her opinion, the fact is that these bank closures are a result of the Fed's hiking rates and then these banks not adjusting accordingly to how quickly rates rose. In other words, they didn't properly navigate their assets and investments when going from a 0 rate environment into a 4.5 to 4.75 rate environment.
Where
which is,
have they been the last 10 months?
yeah.
That's what I want to know.
So this is where the Fed funds rate sits today, and if you'd like to pick my brain about this more, give me a call.
Right.
All right, so the underlying concern with these closures is simple. Is it contagious or far-reaching?
We're talking about the bank closures, right?
Right. Is there going to be more? Is there going to be a ripple effect, and it's going to start an avalanche? And I think, honestly, it's too early to tell, but the best we can hope for right now is two things. First, this doesn't create a massive run on banks with people withdrawing their funds. It was a bank run that forced regulators to close Signature Bank. So that's the one that actually, we kind of fell under the radar, but that one actually closed earlier.
That's the New York bank.
That's a New York bank. Customers withdrew $10 billion in deposits, wiping out the company's balance sheet within hours. Today also started off as a good day for rates, and it's mostly due to fear on the banking front. Conventional rates have moved down to around 6.57, so that's about a 0.5% move down, which is great.
That's good. People have relaxed a little bit.
It doesn't sound like a huge, drop, but it happened in just a matter of a couple of business days.
Right.
So that's the kind of positive and interesting part of it.
I think we'll see some of that relief in the interest rates as being reported now.
Right.
Fact.
Let's go ahead. I want to make sure. Yeah. Okay. So the rates did drop. We were at 6.77 last week. We're at 6.57 on the 30-year right now. 15-year dropped 6.12 down to 6 even, and the VA dropped from 6.33 down to 6.12.
Okay.
So we definitely saw some improvement in rates.
Good.
All right, let's move into the Cromford Report.
Okay. Yeah, let's look here. She's changed the format a little bit on this, but still
I enjoyed it.
really good information. Yeah.
Pretty good.
Yeah. Start us off.
All right. Well, inventory is still below February 2019. So the supply, she has it at 17,480. I think I might have a little bit different number as of this morning. I just did it.
I think that might have been a February number.
Oh, okay, yeah.
Because we're lower now.
Oh, that's right. Yeah, that's a February number.
Yeah.
So that is the fourth lowest in 18 years. So a lot of people are going, oh my gosh, I'm seeing for sale signs everywhere. It's still extremely low compared to what you are used to seeing, and certainly what we were seeing during the recession. The lowest, ironically, this is the fourth lowest. The lowest are the last 3 years. So we are seeing some increase, but we're still, the last 4 years have been the lowest ever recorded as far as inventory.
Lowest in supply and fourth lowest in demand as well.
Yes, they're running in parallel, which is why we're not seeing the crash and that big window of huge inventory, no demand that we had during the recession. They're running parallel where the inventory is low, but so are the number of transactions. So that's also the fourth lowest number of listings under contract.
So we've titled this episode Foreclosures. Are we going to see more? Let's talk about that.
You know, it's very popular in social media to make things very dramatic so that you'll click on them.
Yes.
And one of the ones you see
Clickbait.
a lot is foreclosure
Foreclosures
explosion.
on the increase. Yeah. Well, let's talk about that. Let's talk about those numbers.
Foreclosure explosion? No. There are 321 pre-foreclosures. Now remember, pre-foreclosure happens automatically where after 90 days of past due, the 91st day, it automatically goes into foreclosure.
Right.
However, the number of homes that actually foreclose is way lower than that. The actual number, 34.
34.
So.
And that's for February?
February.
Okay.
So,
Not
just
very many
to kind of
folks.
see how the the drama gets built in these media posts, you could say foreclosures spiked by 500%.
Oh my goodness.
If that happens, that means we would have 170. Which
That's
again,
still not
when
very
you're
many.
looking at the graph of sales, it
Right.
would still be a flat line along the bottom of
Right.
the graph. You wouldn't even realize it was there.
Right.
So just when you're reading these things, seeing these reports, make sure you dig a little deeper and look
Yeah.
behind the curtain
And check
a
your
little
source
bit.
and
Yeah, check your
actually
source and-
see what numbers, where they're getting their
Yeah,
numbers
are they
from. and-
crunching numbers together to only look at a segment
Mhm.
to make it look
More
disastrous?
dramatic. Yeah.
You know, so
All right, moving on to more stats here. Rental supply. Rental supply is flat.
yeah,
Looks like
basically
what you
flat.
have, yeah.
She made a funny comment. The only thing crashing in rentals is landlord expectations.
Ah, yes, there we go.
Um,
And that being the list price, median list price being $2,200, median closed rental rate at $2,100.
so
So
tenants
high.
are
No, that's
getting,
high, but-
doing some negotiating and getting a little better deal.
That's
so
good.
That's great.
good. We are back in skepticism, looking at that market cycle.
The emotional meter.
Yeah,
That's what
yeah.
I like to call it.
Went
yeah.
into despair, and we were in despair in November and skeptic in December, and then back into despair in January, I believe. I got to get my cycle out.
And now
This
we're
is
back
just-
to
it's just
skeptical. So it kind of did a little boop, boop, boop.
Yes.
And now we're back up again. So the next level is hope. So let's hope that's where
Let's
we.
hope that's where we get to.
Right.
All right.
All right. Inflation.
Talk inflation,
Dang
yeah.
it. 6.4% in January. And the PCE came in at 5.4. So basically what that's doing is it's pushing the prediction back. We were originally looking at a March to May time frame of when we might see that 2% number achieved, but we're now looking at probably June.
Yeah, so the
Um,
CPI is the 6.4%.
Right.
So, and if we follow the train with where we've been going with that number, yeah, May to June now is the prediction for the 2% annual inflation that the Fed is pushing so hard for.
Right.
And the CPE is at 5.4, as you said. And so again, we're at June, folks. Unfortunately, that's the bad news of this.
Inflation report tomorrow could dash today's rate drops. Well, it did not. So this morning, the U.S. stock opened sharply higher after February inflation data matched estimates and suggested pressure on prices continued to cool.
Okay.
The numbers could ease Wall Street worries over steeper incoming interest rate hikes from the Fed Reserve at the time when the banking sector is regaining its footing following the collapse of two regional banks. So
Okay.
the bad news and bad news, it's going to result in probably some good news, and that the Fed hopefully will only increase the rate by 0.25.
0.25%, yeah, versus 0.5%. So that is good. That's what we want. Less impact on the mortgage rates, but
So currently, across the valley, we are still in a mild seller's market.
yep. And I smile because we're going to discuss what that means to you, a buyer.
Okay, we're currently in flat appreciation territory, but we expect to see appreciation begin to start picking up a little bit.
Yeah.
Here.
Contract ratio across the valley is 62.6%. Under contract listings, 8582 as a count. Active listings at the time she did this, which was March 11th, was 13,706. It's actually pretty normal for this time of year.
Right. You compare that to 2019. Under contract was 10,634, so
Definitely higher.
Definitely higher. However, the actives were equally as
Yeah.
high at 18,177. So you
So
were
the contract ratio
5,000
was
higher.
very
So
close. Contract ratio was 58.5.
right. So it's
So we're
almost
good.
the same as we were in 2019.
Right. But we're not predicting a buyer market anytime soon.
So there's some great advice that Tina gave to home buyers and sellers. The best time to buy is at the beginning of a seller's market. So if prices are just starting to go up, so you get in right at the beginning when those prices every month are going up and your appreciation is going up every month. The best time to sell is on the downside. So you've already peaked, so go ahead and jump on the bandwagon then and go ahead and get sold as you're on a downward market. So you sell here, your home is worth a little less here and a little less here, so you hit that point where you
looking
do well.
On a microcosm here, Peoria, the Cromford Market Index is at 127.8, showing trending up still.
Okay.
So the change is 23%. Last month we were at 104.2. So it definitely increased further into a seller's market.
Right.
Surprise has the same trending from 105.4, or they were at 96.1. Now they're at 105.4.
So they went up slightly, but they're still basically balanced. The two buyer market areas are Maricopa and Buckeye.
Buckeye, yeah. Yeah, Goodyear is almost in a seller's market. It's a baby seller's market, like we said last week. Baby seller. Chandler is hot.
Yeah, they're crazy hot.
Hot to trot. 202.6.
Yep.
They're going nuts over there in a seller's market. So.
Okay.
All right.
So iBuyers are still iSellers. We're not seeing much iBuyer purchasing activity, but they are working their way through their inventory. Same with short-term flips. Those are definitely on the decline. We're just not seeing a lot of activity on that right now.
The market share through January was 73.9 for owner-occupied. Second home is 10.2. Investors, to your point, is 14.5, and iBuyers is 9/10 of the market.
Wow.
Less than a percentage of the market is what iBuyers are doing right now. So
keep in mind that investor number of 14.7 is also going to include long-term investors.
Sure.
So
yeah,
the number of fix and flip is probably closer to what the iBuyer number is, which is 1%. So,
yeah,
is my guess.
Yeah.
Okay, you do expect to see a big rise in FHA loans because they have reduced their private mortgage insurance by 30%. Right?
By 30 basis points, yeah.
30 basis points. Okay,
so saving some homeowners, it will, new loans. I don't think it applies to previous loans. I think it's just new loans. A couple $100 a month.
That's huge on a month after month after month basis.
Great. Yeah.
Absolutely. So basically, we're talking about inventory levels remaining low. Basically, sellers are responding to interest rate increases by not listing.
Yeah.
It's just, it's not worth selling your home when you're sitting on a sub-3 interest rate and knowing you're going to have to go to a 7% or 6.5%.
Since the beginning of the year, in fact, we're down in new listings 17.5% in new listings.
Year over year?
No, since the beginning of this year.
Oh, since the beginning of this year. Got it.
Yeah.
Okay.
Yeah. Price reductions are declining. 14% of active listings had a price reduction. And then the median price reduction is still at about $10,000.
So, yeah, price reductions are actually moving down. Sorry, crisis predictors. Not going to fly
32 days are the median days on market prior to getting a contract. We've been talking about average days on markets for active listings. So we have to actually look at how many days it took for a listing to get an offer. That's only 32. It's not that bad. All right, so median sales price has reduced down to 422,000, down $58,000.
Since when?
last year.
Last year this time?
March,
Okay.
yeah, 2023.
Okay,
Or
so this is year over year.
22. I'm sorry,
numbers.
since the peak. These numbers are since the peak.
Since the
May
peak.
2022 was the peak.
Okay,
So we're down 58,000 since the peak.
okay.
Okay, sales over asking price is down 39% to 16% of all listings go for over asking price. Not very many.
Not happening very often.
Used to be 55% back in the peak. Seller concessions were at 12%. Now they're at 48%.
Yep.
48% of all transactions have some sort of seller concession.
And how much are they?
We're averaging about 10,000,
And where were we at?
or no, 9,000. I think.
9,000
Yeah.
we were at.
3,500.
Wow,
That's the next matrix.
it's a lot of coin.
Mm-hmm. Sales price to list price late ratio was at 101.7.
I remember that.
Music,
Now we're
music
back
to the seller's ears.
Yeah,
Now we're back to 97.3.
which is pretty normal.
So that's 2.7 below the asking price. Median days on market prior to contract. Oh, it cut off. I apologize. I don't have what it was in May. I don't think it was very long though. Well, here we can tell you it was 7 days because it's 32 days now and we're increased by 25.
That's right, I remember the 7-day
Oh, there it is.
average. Yeah,
I
that
had to
was
shrink it. There we go.
crazy.
Yep. So as a summary, inflation measures increase, pushing 2% goal further out to May or June if they do not decline. Of course,
Right.
that's if they do not decline.
Mm-hmm.
Things could get better. Greater Phoenix is in a seller's market. However, owners with a 2+ years in ownership still have significant profits. Still close with significant profits.
Right, home equity is still strong.
And the bad news is for the next 2 to 3 months, year-over-year appreciation rates will be negative.
Yep.
We know that because
We've
we're
talked
building
about
up
that
to
a
the
little
peak,
bit.
right? We're building up to May 2022, and that was the peak, and then prices started declining. So that's, you know,
Once we catch up with those declines, then
Right.
when we hit that peak and start going down, then everything will start coming together again.
so give us the inventory. Let's
Okay,
bring it on.
thank you for that. Let's wrap it up with inventory. Valley-wide, we're very flat, 14,520 last week, and we're at 14,405
Okay.
active listings valley-wide.
Okay.
Peoria also flat, 452 down to 449, and Surprise the same. They were at 696, they're down to 683. A little more closer to home, Trilogy at Estancia did drop down to 51 available homes, 468,000 the most affordable, 1,275,000.
Mm-hmm.
Now we'll stop here for a minute.
Okay.
Change the way that I calculate the days on market. I'm actually looking at the days on market for the homes that sold in the last 30 days, which I think makes more sense because if you look at just what's active and the days on market for those, you may have situations where there are sellers with expectations that are out of line, so they're racking up 100, 200 days on the market needlessly
Yeah.
just because they have their home overpriced. And they're
Or
not
they
willing
put it
to
on during, the end of last summer when prices were a little higher.
do right.
And so, yeah, they haven't taken it off the market to clear the days on market, because there's a way to do that. 45 days what it takes. So you can put it back on the market and you get a whole new clean slate. Hopefully your price is adjusted to what's currently on the market, currently selling. So that's, I think that's a great way to do it.
So I think that's going to give you a more realistic home seller. It's going to give you a more realistic number or expectation on the days on market. So for Trilogy, for the homes sold in the last 30 days, which are 15 by the way, the average days on market is 66.
Okay.
All right, Estancia Village sitting at 52 homes available, 340,000 the most affordable, 1,125,000 the most expensive, and they are sitting at 73 days on market for the sold homes. Estancia Village has sold 17 homes in the last 30 days.
All right. Okay.
Blackstone Country Club is sitting at 8, 550,000 remains the most affordable, 3,280,000 tops the list. 117 days, sellers.
Ooh.
So you're in a kind of an elite price point there. So it's taking a little bit longer to sell homes
Yeah.
in
I
Blackstone.
mean, luxury homes are definitely moving, but it does take a little bit longer still. Yeah.
Portobello, 21 homes available, 438,000 the most affordable, 859,000 the most expensive. 120 days on the market, Portobello, for the homes that have sold in the last 30 days. So
Okay.
we'll see how that adjusts
Yeah.
and shifts.
Because it could be that somebody, there is a home that's under contract currently that has
Driving the whole number up.
a big days on market count. Yeah.
Yeah.
So that could reduce.
At the Grand, 144 homes available, 258,000 the most affordable, 1,295,000 the most expensive, and they are averaging 66 days on market.
Okay.
Sun City West, 187 homes available,
Wow.
199,000 the most affordable, 925,000 the most expensive,
Okay.
77 days on market. And finally, Westbrook Village, 35 homes available, 292,000 the most affordable, 540,000 the most expensive, and they are averaging 90 days on market.
Okay.
Under contract, Trilogy at Vistancia has 24 homes, so very healthy ratio of number of homes under contract. And finally, Vistancia Village is sitting at 28 homes under contract, so they as well are doing very well in getting product under contract.
Yeah.
Okay. All right, that's our report for this week. I hope everybody has a blessed rest of the week and weekend, and we will see you again next week. Take
See
care.
you then.